Welcome back to Explain the Charts. Today is September 27th, 2025, and we're taking a deep dive into Ethereum, or ETHUSD. The market has been incredibly volatile, with major news headlines driving some serious price action. We'll break down all the latest news, from whale liquidations to ETF flows, and then jump into the charts to see what the price is telling us. We'll cover the daily, hourly, and 15-minute timeframes to give you a complete picture, from the long-term trend down to the minute-by-minute action. Let's get right into it. The biggest news this week has been the dramatic plunge below the psychological $4,000 level. We saw headlines about a massive whale investor losing over $45 million in a liquidation event as the price dropped. This sell-off appears to be driven by a mix of profit-taking near all-time highs and broader macroeconomic fears, including a potential U.S. government shutdown. Compounding this bearish pressure, Ethereum ETF net inflows have plummeted this month, a stark reversal from the massive $3.8 billion inflow we saw in August. In fact, we've seen 2 consecutive days of net outflows totaling over $200 million. Funding rates for futures contracts have also flipped negative, indicating that traders are increasingly positioning for further downside. However, it's not all doom and gloom, and the bigger picture remains complex. While short-term sentiment is fearful, some analysts see this as a textbook flush of overleveraged traders, which can be healthy for a sustainable move higher. Long-term fundamentals are also strengthening. Ethereum's upcoming Fusaka hard fork, scheduled for late 2025, promises to significantly reduce transaction costs and improve scalability. We're also seeing continued institutional validation, with developments like Chainlink verifying reserves for new Ethereum-backed ETPs. Exchange balances are reportedly at a 9-year low, suggesting that long-term holders and institutions are accumulating and moving coins into cold storage, reducing the available supply. Now, let's pull up the daily chart to put this all into context. As you can see, Ethereum had an incredible run-up, peaking just below $5,000 in late August. That high near $4,950 established a major resistance level that bulls will need to conquer. Since then, we've been in a corrective phase. This isn't the first major dip we've seen this year. Notice the sharp capitulation wick back in early August that went as low as $1,900 before quickly recovering. We also established a significant consolidation zone between $3,200 and $3,600 during June and July. This area acted as a strong base for the last major rally and now represents a critical long-term support zone to watch if the current downtrend continues. Let's zoom in on the price action from August to now. After hitting that peak on August 24th, we saw a sharp rejection, forming a bearish structure of lower highs and lower lows. The price failed to hold the $4,500 level, which was a key pivot point. This week's drop was particularly aggressive, slicing through the $4,200 support level with high volume. This move correlates directly with the news of ETF outflows and rising macroeconomic fears we discussed earlier. The daily candle for September 25th shows a massive drop of nearly 7%, confirming the intense selling pressure. Switching over to the 1-hour chart, we can get a more granular view of the recent battle. You can see the price trying to form a base above $4,200 for several days before the final breakdown. Each attempt to rally was met with selling pressure, creating a clear descending resistance line. The break below $4,000 was fast and violent. Since hitting the low around $3,832, we've seen a bounce back to retest the $4,000 level from below. This is a classic technical scenario where previous support now acts as resistance, and how the price reacts here is critical for the short-term direction. Now, for the really interesting part, let's look at the 15-minute chart focusing specifically on September 25th. Here you can see the liquidation cascade in real time. The price was holding around $4,160 before a sudden, sharp wave of selling hit the market. In just a few hours, the price cascaded downwards, breaking through multiple support levels without any significant pause. This is the kind of rapid move that traps leveraged long traders and forces liquidations, which in turn adds more selling pressure, just like the news reported about that $45 million whale loss. The volume spiked dramatically during this descent, confirming the panic in the market. Back on the hourly chart for the last 48 hours, we can see the aftermath. The price found buyers around the $3,850 level and has since staged a recovery. We've reclaimed $4,000 for now, but the price action is still choppy and uncertain. The negative funding rates suggest shorts are piling in, which could either fuel more downside or become fuel for a powerful short squeeze if buyers step in with conviction. The current price is hovering around $4,034, making this a critical inflection point for the market. We're essentially consolidating after a massive move, and the next leg could be just as powerful. So, to recap, let's return to the daily chart and outline the key levels to watch. Critical support now sits at the recent low around $3,830. A break below that would likely target the next major support zone between $3,400 and $3,600, which aligns with previous consolidation. Further below that, the $3,200 level is the last line of defense before a much deeper correction could occur. On the upside, immediate resistance is the psychological $4,000 level, followed by the broken support at $4,200. A firm reclaim of $4,200 would be the first sign of strength, with the most critical resistance remaining at $4,500 and then the all-time high region around $4,900. Now for some unbiased predictions. The bearish case seems more likely in the immediate short term, with a 60% probability of retesting the $3,800 lows in the coming days. This likelihood increases if ETF outflows continue and the dollar remains strong. The bullish case, which I'd give a 40% probability, hinges on holding the current lows and staging a short squeeze. If we see a sudden reversal in ETF flows to net positive and the price decisively reclaims $4,200, the odds of a move back towards $4,500 increase significantly. Look for upcoming news on the Fusaka testnet performance and keep a close eye on those daily ETF flow reports, as they have been a major market driver recently. That's our in-depth analysis of Ethereum for today. It's a trader's market, full of both risk and opportunity. Always manage your risk and trade based on your own strategy. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and ring the bell so you don't miss our next update. Let us know your thoughts on ETH in the comments below. Thanks for watching.